Hey everyone, welcome back to another Market Open live stream. So today we got to figure out when is this stock market pain going to end? And one of the things that I think is very interesting is looking at when we have supply chains catch back up and inventory catch back up. Do we actually think that prices are going to come down? That is the big question. Is that when will businesses stop raising prices? Because when businesses stop raising prices, then and consumers stop essentially being willing to pay these higher prices, then maybe we could finally see a relaxation of the inflationary concerns. And when we have less inflationary concerns and no concerns about global growth, then maybe things just settle down. Well, what's fascinating is we had Peloton give us a little bit of an example today. So Peloton this morning reported earnings, and I don't know if you need a lot of help to guess whether those earnings were good or bad, but I will go ahead and tell you exactly what they were. Peloton ended up confirming that their CEO will be stepping down. They fell about 12% in pre-market at some of the right when they initially announced their losses. Peloton is cutting about 2,800 jobs, affecting about 20% of corporate positions. We've got, let's see here, Peloton to cut roughly 800 million in annual costs and reduce capital expenditures by 150 mil. And you've got, and I know this is Peloton, right? So it's kind of like, okay, well, we know things are bad at Peloton, but what was really fascinating out of the numbers that we got wasn't so much that obviously they're cutting jobs, their CEO is stepping down, their losses, their projected next quarter losses are going to be somewhere between 125 to 140 mil rather than the 18 mil that was expected. Their revenue is going to be somewhere around 20 to 30% less than expected based on their guidance. Their forecast for the year was down about 20%. I mean, everything was pretty miserable in the Peloton quarter. They even had less digital subscribers than expected. They had 862,000 digital subscribers versus the 906,000 expected. But what was really incredible was after all of the dust settled of their earnings call, they said, hey, what about all of the inventory y'all have? What about all of these extra bikes? Why don't you just do what Kathy Wood says and sell the bikes cheaper so you could get more customers? And what happened? The answer was no. They are going to use this extra supply to sell it over time at full price. They don't actually expect to lower prices. If anything, it seems like they're kind of implying, just like all the other companies, that they have pricing power, and that even though Peloton's getting destroyed, via this last earnings, what are they doing? They're saying, nah, we don't need to cut prices. It's not the prices. The prices can stay high. And that to me was really, really surprising. So when I was they just had their earnings call. And so a lot of folks have been paying attention to this one because Peloton's obviously been a big story here. And that's crazy. So that kind of makes me wonder, okay, at what point do we actually see prices come down? Now, one of the cool things about, I know I say cool thing, it's kind of harsh to do, but one of the cool things about inflation is that if prices just stay high, like for example, Peloton, and they've actually been reducing the cost of their bike over the last 6 to 12 months. But one of the neat things is if they keep prices stable, if manufacturers keep prices stable and they don't actually raise prices, then inflation ends up staying flat and we end up with zero inflation, right? The issue is, does our economy slow at the same time inflation slows? And then do we then go into a slowing economy or a potentially recessionary economy? Or does the economy keep booming, inflation keeps going, and then we end up getting squeezed into a more difficult tightening period? One of the things that's funny is a lot of folks, and we were talking about this yesterday as well, a lot of folks keep making this argument that, hey, like the Federal Reserve's tightening cycle, it's priced in, like don't worry about it. The market's already pricing in 5 rate hikes. Some people say 7 rate hikes. The market seems okay with 7 or with 5. Who cares? Whatever. Yeah. The problem is those might not be anywhere near enough. The fact that 5 rate hikes gets us to 1.25% is still a joke compared to where we were when we cut rates during the pandemic. I mean, I'll never forget the day we were like 2.25% and rates, and Jerome Powell on a Sunday frantically cuts rates to 0. I'm like, oh man, Jay Powell doing work on a Sunday? Refinance everything. We're about to go shopping. That was very true. But anyway, Harley Davidson also provided some guidance here. They mentioned that in the first quarter here, their chip availability remains challenged, that moderate chip availability improvement is expected in the latter half of 2022. Now that's moderate chip availability improvement. I'm seeing this a lot, by the way. Is that they're not saying things are going to be solved by the second half of 2022. Just that things should hopefully get better, which is good. We're seeing a little bit of some peaking in used car prices as well. Q4 motorcycle shipments coming in at 29,000 versus just under 27,000 estimated. So really nice beat. Harley Davidson's actually up 9. It was up 9% at one point here. Adjusted EPS beat, revenue beat, and they do see. Let's see, what else do we have here? Operating margin improvement. I mean, again, raising prices. And okay, let's see here if there's any other note here. Not really. Yeah, okay, still expecting 5 to 10% revenue growth for the year. Yeah, so emerging, oh, that's interesting. North American motorcycle sales up 8%, but emerging market motorcycle sales down 7%. It's kind of like possibly, and I'm not sure how much China or Harley Davidson, I don't invest in Harley, so I don't know. But one of the things that I'd be thinking of that I'd want to look at is how much does Harley sell in a place like China, or how many motorcycles get sold in a place like China? And how much are we really seeing that economy slow down in China? Because that's another thing I think gets missed. I mean, I know Ray Dalio is a big bull on China. Hey, prices are low. The government's accommodative. Their central bank is accommodative. That's great. But if your economy is starting to flounder under the real estate debt crisis of Evergrande, that's scary. I know there are a lot of folks who are like, everything's going to be fine with Evergrande. And so far things have been playing out decently, but who knows if that's just the canary in the coal mine for a debt crisis in China. And I don't know if betting on China and that recovery of that consumer. And I've been saying that this is not new. I mean, I've been saying this for like 6 months. I'm nervous about that the recovery in China. I mean, you even had CAT sell off like 6.6% today in China. That's the battery facility. Tesla actually buys a lot of batteries from them. It's down 6.6% today. It's a massive battery company. It's crazy. I try to look at the Chinese markets as well. Let's see here. Treasuries. Yeah. Oh, okay. Yeah. So a little bit more drama in the Treasuries market. Let's see. We've got the Dow's actually up almost 0.25% right now. Ooh. But we've got S&P roughly flat, NASDAQ coming down about 0.2%, and we have oil relaxing a little bit. This relaxation in oil not only came with this U.S.-Iran talk, but also when Macron, president of France, it seems to be talking potentially Putin off of the ledge. Who knows? You get so much confusing information. Apparently there were reports that Russia is sending more blood to the front lines, and it's like, really? So then you look up the shelf life of blood, and it's like, oh, okay, well, if you freeze it, it could actually last years, depending on what coagulants you use and such. So maybe that doesn't necessarily mean anything. But anyway, a little bit of a relaxation here in oil, but that has not helped this, and that is the 10-year Treasury bond. This, by the way, is what affects mortgage interest rates, and it's just every day. It's just been ticking up in February here. So right now sitting at 1.95. I mean, we are almost at 2% here. So what's wild to me, though, is that the break-even rates haven't really moved. I'm going to take another peek here. Let's see. Let's do 5-year. 5-year break-even. 5-year break-evens, by the way, are your inflation expectations. You take the difference of the yield and tips, which are negative, and no, they're stable. It's quite odd. Yeah, that the break-even rates are remaining stable. I actually find that concerning because we get more and more information that inflation and pricing power of businesses is stronger, and inflation is expected to come in higher, and the break-even rates aren't moving. And to me, one of the reasons that's potentially concerning is either the bond market knows that it's all going to go away, that inflation's going to go away, and it's all going to be okay, or we're actually not properly pricing in the amount of inflation that could happen. Now, you kind of have to pick your own side on that one. All right, let me try 10-2. 10-year, 2-year. 10-year, 2-year. So the 10-2 is also the yield curve, and that's, some see it as an indicator, a recession indicator, right? The more it goes to zero, the more likely we have a recession. Okay, so yeah, I mean, February, it's been pretty low. It's bobbed up a tiny little bit. Like, if you really want to get into like the week, it's bobbed up a tiny little bit within February, which is nice. We want to get that, get the yield curve wider, a little bit more of a sign of a stronger economy. But it really, the nature of that is that you don't really want to get compensated more for more or even close to for a 2-year bond as you would for a 10-year bond. This doesn't make sense, right? You would expect to get paid a lot more for a 10-year. And so when you see the difference between the two converge to zero, it's like, wait a minute, that's a sign of some bad expectations and some more flight to safety in the short term. It's kind of weird, especially since we know rates are going up, and then it's like, why would you flee to bonds right now? I don't know. All right, so let's see here. Talked about yeah. So okay, title. When does the wobble, so to speak, end? The wobble really ends not just when we see certain categories start of pricing start coming in weaker, like what we've seen with used cars. It doesn't just end when some categories start turning negative. Probably not going to be enough. We're going to need to see that wages and rents and a large portion of the other categories are relatively starting to inflect to the downside in terms of pricing. And when that occurs, that I think is when we get a little bit more enthusiastic about markets, or JPEG, well, which could actually lead to, so it could happen at the same time rather than or, it could be an and. JPEG, relaxes a little bit some of the monetary tightening, and we end up in just continuously accommodative monetary regime. So another one that was interesting was Cisco. Unlike Tyson, the meat manufacturer, and I don't know everything that Cisco does. Let's see here. I thought they make like cooking oils and stuff like that. Let me see. SYSCO, wholesale restaurant food distributor. Marketing and distributing food products, smallwares, kitchen equipment, tabletop to restaurant. Interesting. Okay, so they're okay. They're like logistics. Got it. So they don't necessarily make the food. Okay, got it. All right. So this company saw their sales actually increase 16.3 billion versus 15.9 just this morning. Their earnings, though, actually came in lower, 57 cents versus 70 cents. And they blamed the COVID environment for higher costs. Yeah, they really haven't mentioned anything else. That's interesting. All right. Okay. All right. So what else? Well, let's see here. So we talked about Ukraine. Let's see. We talked about. We have not yet talked about NVIDIA is now officially abandoned the $66 billion purchase of SoftBank's ARM, bowing to regulatory pressure. Apple picked up AI Music. Ooh, Kathy Wood offloaded the most Twitter shares since last May, just days before earnings. It's interesting because, I mean, that seems relatively consistent with what she said in her last video, which was her expectation that the consumers are actually slowing down. Oh, wow. Yeah. On RK, she uploaded 3.6 million shares. What is that now? Like $40? Let's see. Twitter, $36. So 3.6 million times $36. That's about $130 million worth right there of Twitter, plus another 300K shares in ARKW. Wow. That's quite interesting. All right. Interesting. And she bought more Roblox. And actually, she's buying Tesla again, which is very interesting because she's been selling it. She bought almost 24,000 shares of Tesla. It's really fascinating because she had been selling Tesla like crazy. And now it's like she's picking it up again a little bit. And the pricing hasn't been like horribly different. I mean, maybe it's a little bit lower right now. But it just, I think she's been getting a lot of pressure about like, hey, why are you selling and lowering your allocation to your winners like Tesla? When those are the ones that kind of set up your fund, right? Or specifically Tesla. I don't know. But anyway, so she did a little bit of buying yesterday. All right. So Tesla over Twitter. That is also a bet that I would make. But anyway. So what do we got? Let's take a look at some of the sticks. Let's see here. All right. So Faraday futures is actually up 4%. Faraday's at $4 though. Wow, $4.2. Jeez. Norwegian Cruise Line's up a couple percent. Look at the Peloton Rebound. My goodness, it fell in the after hours a lot. It's actually up 2% right now. That's kind of funny. Yeah, look at this. You closed yesterday here at about 29.50. It fell all the way to 25.60, and then it's just immediate bye. So it's actually positive after these terrible earnings. It is possible, and sometimes this happens on purpose. It is possible that the CEO leaving is enough for markets to say, hey, you know what? Okay, all right, we're gonna give this a shot, and we still have those acquisition potentials, so we're gonna keep betting on this one. But that's quite odd. Soaring costs for vegetable oils are an ever-growing threat to India's effort to bring inflation under control. Yeah, that's not good. So let's see here. Okay. The dollar index is not dropping. Somebody donated $5 to say the dollar index is not dropping, showing a shortage of a dollar shortage. Well, I think there's even though we poop on the dollar, it's still deemed to be one of the safest assets in the world. And I really get tired about the argument that, and you hear this one all over, but it's quite interesting. We regularly hear that, oh, well, I mean, if there's high inflation, you don't want to be in cash because your purchasing power goes down. Well, that only matters, and that's only true if what you're buying is becoming more expensive. If what you want to buy is becoming less expensive, your purchasing power is going up. Yeah, that's deflation. But anyway, yeah, that's quite interesting. The dollar not dropping is probably a sign of just global concerns, global nervousness. So, all right, let's see here. Okay, so tattooed chefs at $12. Ooh, Aurora Cannabis. Wow, Aurora Cannabis at $4.20. Wasn't this like a $30 company at one point? No, never mind. Okay, maybe I'm thinking way back. Yeah, well, I mean way back, but that was in 19. Huh. I don't know. It's cannabis. A lot of bets were made on Biden. A lot of bets were made on Biden that something was going to be able to happen there. All right, let's see here. Canadian Power 1. So okay, in terms of what we have in green here, beyond LiDAR, AI, It opened so far. We saw yesterday. Yesterday we had really interesting start where everything just ran the first 10 minutes. Lasted for about an hour and a half, and then it really started bleeding down and selling down mid to end of day. The end of the day sell down is always a bummer, especially if you're trading and you're holding on. But yeah, let's see. Backed holdings had an insane day yesterday. I mean, up 33%, but also down 6% right now. And that's, oftentimes what you get here is you get a lot of speculation that, oh, well, BTC just ran so much over the weekend, maybe it'll just keep running. And it really hasn't been. And keep in mind, if you want to trade, FTX also has an app. I know you all know that the live streams are brought to you by FTX, which in the US, you can go to mettkevin.com/FTXUS, but check out their trading platform and their app. The app is absolutely beautiful, by the way. Really, really cool. Check that out. Links down below. So look at Airbnb, 3.9%. Simon Property Group, 3%. Simon Property Group reported. I read the earnings call, and I have to say, it was the most boring app. Or I'm sorry, it was the most boring earnings call that I really ever read, because they literally didn't tell us anything. I mean, it was so terrible, just about how they were, trying to raise lease rates, but they were having pricing difficulties, which is not a surprise. Like, the only companies that I've seen saying they have pricing challenges are like commercial landlords. And by commercial, I should clarify, like office space landlords, right? Or retail. Yeah, that's the only place I'm seeing weakness, but not in real estate. Not like housing is just on frickin' fire. It's nuts. Anyway, okay, so let's see here. What I thought was really interesting as well is yesterday everybody was quoting this JPM guy that I talked about also at the beginning of the day. This JP Morgan guy was like, "Oh, we think now, we think there's too much fear priced into the market. It's time to buy stocks." And that was yesterday. So you get an analyst at JP Morgan's like, we're at the bottom. Buy everything, right? And then today, literally the next day, they put somebody else on the news, also from JP Morgan. And it says, the Fed may destabilize markets if it turns more aggressive and unpredictable, said David Kelly, chief global strategist at JP Morgan. Its messaging is, quote, frankly worrying, end quote, and may lead to a flatter yield curve and tighter or trigger concerns that the economy will slow too much in March of 2023, and that investors should prepare to switch towards long duration assets and tilt toward value and global stocks. Dude, why did they put these people from JP Morgan up? JP Morgan's pissing me off. Now, I've complained about JP Morgan a lot in the past. Now I'm complaining about them even more, because this is just like, now you're just messing with people's emotions. This is wrong. It's kind of like when JP Morgan's like, Nikola, yes, we are investing in Nikola. Why? Because it has a great story. Like, that was a sign of a bubble right there. It's like, oh yeah, we're investing in this startup because it has a good story. What freaking morons. Anyway. So let's see here. Not too much drama, really, though. I mean, Simon Property Group, Snapchat, Pfizer, these guys down 3 to 5%. I'm going to go look really quick what Pfizer's complaining about, because they just had earnings. So let's see what Pfizer's beef is. Okay, let's go Pfizer. There we go. PFE. All right. Yeah, I know there are different people who work at JPM with different opinions, but what you have to realize is people just put on Twitter, JP Morgan says this, and then JP Morgan says it. It's the summary that people give. Nobody's actually quoting the name of the analyst, right? It should be like, you're right. I mean, they should say like, oh, one random analyst thinks this. the chief investment officer of global strategies at JPM thinks this. That's fine. But usually that's not what you see on Twitter. It's pretty bad. Anyway, let's see here. Okay, so Pfizer, get ready for this one. You all gonna love this one. Pfizer sees need for another booster shot, says top scientist. Get ready. Let's see here. Meanwhile, they're working to develop a new COVID treatment. Yeah. I don't know. I'll tell you, Lauren was pissed yesterday. She was like, why is it that I still, because she had COVID at the beginning of the year. It was like January 1st. It was a nice New Year's gift. Anyway, she's like, why is it that, she says this, I got COVID the worst, yet I just got a booster, a month ago, like literally perfect timing to have the best defenses. So she's triple vaxxed, gets a booster a month before, and has not only bad symptoms, but it wasn't terrible. It was Ami. But now lingering feelings. Like she's had to double her asthma medication, just as an example, which is part of kind of just like COVID still remaining in your system. Anyway, she's complaining about that yesterday. And I'm like, wow, it sucks. Who knows? It could have always been worse, right? But anyway, it's sad. Okay. Anyway, so let's see here. What else did Pfizer tell us? Pfizer. Talking about Paxlovid, the pill for COVID. It looks like their revenue forecast missed. Sees 2022 revenue at a midpoint of about 100 bill, and the estimate was 106. Revenue came in the fourth quarter at 23.8 versus a 24.18 expected. So, okay, looks like slight miss there. So that just came in this morning. The morning earnings are fun. Pfizer sees a need for more profit. Oh, God. Yeah. They'll cancel you. You should have a backup streaming platform before you get Joe Rogan. No. I don't know. All right, so let's we're gonna quickly see what suits are saying here. Let's see. Surging yields have yet to do the trick for banks. Hedge funds, blah 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 blah. All right, whatever. Okay, so we're a minute away from the open. If we have anything like what happened in China, it's gonna suck today. But hopefully not. Hopefully it goes well. So we'll see. And China's not the best indicator for what's going to happen in the U.S. Not that was in my Titanic video or anything. Not kidding. So yeah, let's take a look at some of the indices as we go in. Okay, so far no like euphoria coming, at least to the Nasdaq in the minute here before the open. SPY sitting at down about 0.12, ARC down 0.86 here, and Tesla I think is down fractionally as well. Yeah, barely 0.13. Who cares? All right, well, let's see what happens. And remember, this video is brought to you by FTX. Check out their links in the description down below for trading crypto, which has been a lot of volatility, a lot of money to be made in trading crypto if you trade it. Anyway, let's get the bell.
It's going down. Does show you it is not past that kind of give up liquidation phase.
Let's get the opening bell here at the CNBC real-time exchange. At the big board, it's the NAACP and the Impact Shares ETF celebrating Black History Month. At the NASDAQ, Black Women on Boards, the organization celebrating 50 years of Black women serving on public boards. So some of the other names we have.
I mean, that looks about 60% green there. That's not too miserable. We'll see how things are actually moving. I do want to look quickly while we wait for the first minute to stabilize here. The first minute's always a joke. Let's see here. I'm looking quickly at BP, which is a stock that's been killing it, and which makes sense. Looks like they completed about 500 million of buybacks. They're going to continue to buy back their debt. This is from their earnings call. Increasing opportunities in the energy transition. Trying to see if there's anything else I can see here. Okay, here we go. So BP earnings, BP net came in at 4.07 billion versus 3.87. So as expected, more profitable. They're going to do another 1.5 billion of share buybacks. I mean, these are so freaking much money. Their EPS beat. It's no surprise. EPS, rev, all this stuff beat. And they're trying to get to net zero by 2025. Oh, that's a nice thing to say. Anyway, see, yeah, this is why like the first minute I always think is funny, because look at this, like this is Tesla, the divergence right here at the open. This is Velodyne. This yesterday we were looking at Velodyne. It was up like 48%. Remember yesterday in after hours, folks are like, look at Velodyne, look at Velodyne. And I look and I'm like, okay, Amazon bought some warrants. Like, why do we care? They bought some options. And the thing ran to like $7 a share yesterday. And I'm like, this is insane. I remember saying yesterday in the stream, I'm like, I don't understand this. I think this is nonsensical. They've been business partners. This is no news to me. So it wasn't something I wanted to buy or trade by any means. And so you saw this insanity right here. And I do feel like in a thinly traded stock like this, I mean, look at this. During the open, the thing had traded 7,000 shares, you know? And so all of a sudden you get this insane volume higher than during the open in after hours. And the thing skyrockets like 50%. No surprise, the thing's just plummeting back to earth here, because it's like, that was no news. So be careful about the smaller like penny stocks, especially thinly traded ones. These are the ones that could just totally ream you. You know, you think it's somehow really impressive news. It's just trash. Anyway, so okay, backed holdings selling down a little bit here. So a little bit of a crypto drawdown here. We've got backed holdings down about 9%. You know, what's also interesting is Robinhood was down yesterday. Like the stock was down yesterday. I don't know if the app was down, but anyway, they were down yesterday. While a lot of the other trading brokers were actually up, and now they're down again. Kind of painful there for Robinhood, back to now $13. You know, with crypto trading declines and like this like never-ending wait for crypto wallets, I don't think people are very enthused here. That sucks. Snap down about 5.5, trying to rebound a little bit here on the minute. Let's see. Okay, so these are our large. Ooh, General Motors. Why is GM dropping 5% at the open? That's interesting. Cloudflare had this insane run yesterday to like 116, and now down about 3.4% again. Rivian down a little bit here. That's actually a sharp drop here on Rivian, 2.8%. Just all of a sudden, is anything running? Let's try to find out where the trading theme is. How do you get Discord back? Go to discord.com, download the app, and then type into your browser metkevin.com/chat. So nothing's really popping off here. You've got, you know, even AI slowed down a little bit. Alibaba's taken off. That's quite interesting. If anything, Alibaba's the mover right now. Peloton giving up. JPM's coming up a little bit. So JPM, Alibaba, those seem interesting right now for runs. If you want to short, look at Robinhood. Jesus. Oh my gosh. Sorry, I shouldn't say that. It's bad. Okay. Blizzard. No, I don't. Let me see what Tesla was the one we were looking at first. Yeah, look at that. I mean, that it's just, geez, down to, it just fell down to 894. Now it's popping up again here. But I do think it's very, very interesting. The first minute is such a disaster. First minute or two. It really probably even extends to the first like 30 minutes. And try to get the direction of the market. It's just crazy. But anyway. Okay. So Affirm does report this week, and so does Enphase. So these will be quite interesting. Affirm's mostly flat right now. I believe Enphase is too. Enphase, yeah, down almost 1% here. And DWAC. DWAC. I mean, DWAC's sitting at $80. Like you can't be mad at DWAC. DWAC's been kicking butt. Okay, where'd GM go? General Motors. So yeah, General Motors. I don't know what's happening here. I'm gonna look this one up really quick. Let me see what the suits are saying. Oh, Enphase reports today. Is that so? I mean, let's see about that. Yeah, I was thinking about. I might actually play that one, and of course, send out an alert. Earnings when and if I do. So today's earnings after the bell. So we cover. Oh yeah, apps, Enphase, Lyft, Trivago, Corsair, XPO Logistics. Ooh, yeah, that these could be very. We got a nice set there. Chipotle today. Oh wow. Okay, Chipotle's always been the one that raises prices, even though their costs don't go up, which is just more profit, right? And so that's an interesting concept. But I'd like to see some talk about chips and forecasts at Corsair Gaming. So far, the gaming stocks have not been doing well, so we'll see. Want to see how the chips are affecting Enphase and how their new IQ8 is going. Obviously, IPO or XPO Logistics. When are we going to see some relaxation and pain there? And then apps could be interesting for advertising and app dev, but we'll see. Okay, so let's quickly see what's going on with GM. General Motors. All right, General Motors. Ford, of course, had to halt some production for Mach-E's and some other vehicle production. And GM, downgraded by Morgan Stanley to equal weight from overweight, with a new price target cut down to $55 from $75. People put a lot of weight on these ratings for it to move 5% after that. Gee, I guess all you have to do is really buy some puts and then put out a new stock rating, and there you go. It's terrible. But don't worry. We have an efficient market, or at least that's the hypothesis. All right, let's see what the suits are saying right now. Let's see. Tech and healthcare stocks are poised to underperform today. Yeah, more talk about Meta being the worst performer. Yeah, and this is also very interesting because this is what I've been seeing too, is that the people seem to be spending more money. So I'm always looking for things that are the opposite of what I'm looking at. As everyone knows, high inflation is one of the reasons why the Fed has been worried about the stock market, or why the Fed hasn't been worried about the stock market volatility and won't let it get in the way of rate hikes. But the other thing is that growth seems to be doing just fine. Not only is there no evidence of a slowdown, that's a burn on Cathie Wood. Anyway, some measures seem to be gathering steam. Neil Dutta of Renaissance Macro Research has been pointing out that anxiety about the pandemic is dropping and people are planning travel more, and overall consumption still seems to be gathering steam. Right now, it doesn't look like the economy is going to be derailed by some rate hikes. And as such, the cycle is full speed ahead. See, I agree with that. I'm looking for things that are saying, okay, the market's definitely slowing down, right? Or the economy is slowing down. I don't like what Peter Schiff mentioned yesterday about the Atlanta Fed real, like the GDP now indicator for Q1. But I also don't fully know the mechanics of how they measure that. And so I need to study that a little bit more. But other than that, it seems like everywhere you look, people are spending more money. And we've got another stimmy check coming, right? I mean, the second half of the child tax credit, that is a stimmy check. Now, somebody left a comment, a couple days ago. They're like, oh, well, I might be getting $1,500 to $1,800 for my child, but my tax refund this year is actually going to be less than I expected. I'm like, the anecdote of what happened with your personal tax situation does not remove the fact that you are getting an additional $1,500 to $1,800 per child. It just means you either had less deductions or more income. It has literally, absolutely nothing to do with the fact that you are getting this extra money. Nothing to do with that. You are getting this extra money. If you spent it because you had to pay more in taxes, that's your problem. But that money is coming. So the anecdote of people's personal tax situations, I think, is terrible. It is very, very uneducated about taxes. But anyway, so okay, let's see how the sticks are moving. All right, so I'm honestly surprised that Velodyne is still even 20% up. It makes no sense. Chegg did great on earnings yesterday. I cannot believe, though, that Peloton is getting bought up after this disaster. Mm-hmm. Yeah. So let's see here. Amgen. Okay. Alibaba's still kicking it, killing it here. I mean, this is a good move here. Yeah, if you want to know my thoughts about crypto, watch the market open yesterday. I went through some good TA and my very clear thoughts. Simon Property trying to recover. Okay, I mean, this is a very benign open, I have to say. Like, nothing's really moving in an extreme way in either direction. I think this is just a tenuous market, or maybe I should say more like tentative market. Everybody's just kind of like, all right, what are the inflation numbers going to look like? Here's Coinbase. And that's fair. That's Thursday morning. Set your alarm. Thursday morning, 5:30 a.m. That's gonna be something. Look at that. Tesla actually went positive. These little fluctuations mean very little. Yeah, I mean it went from like negative 0.1 to positive 0.1 here. So very, very little movement here, which is also quite frankly, a little bit of a frustrating market to, in some cases, trade in, unless you're taking advantage of certain option strategies, which take advantage of little movement. But if we're going to have a little movement day here, it's certainly a lot harder to just swing a short or swing a long. Unless you're playing Alibaba. I mean, this one so far since the start has been doing very nice. And all of a sudden, Microvision's killing it. Why? Let's take a look at what's going on with Microvision, if this is just trading activity or what's going on over here. Kevin, you just going to ignore the deficit posted? Why? Who says I'm ignoring something? I understand that we have a juicy deficit. What do you want me to say about it? All right, let's go MBiz. Even the Pentagon yesterday was complaining about how it's taking them longer to figure out how much money they need from the government because inflation has been so bad that they're like, yeah, we need a certain amount of missiles, and the money that we got is not not going to be enough. Lol. Yeah. Velodyne surge on Amazon packed. An overreaction. No kidding. That's literally what I said as it was happening. Thing went up 63% at its high. That's insane. There's actually no news on Microvision, so it's possible that people are just looking at, like Velodyne or whatever, and they're what's it called? Trading MViz because they think, oh, I honestly think the markets sometimes are just this stupid. It's just like, oh, well, Velodyne's up. What's not up is Microvision. It's another LiDAR company. Let's buy that one. Whatever. I mean, if you want to trade it, it's fine. But if you're looking at it thinking, oh, this is going to be a long-term boost here to your Microvision, I will sink twice. I would sink twice. But it's doing very well right now. So if it is something to trade, maybe who knows? Maybe you're getting the Velodyne people coming over. Okay, so is anything getting more extreme here? What we got? Sympathy momentum. There you go. All right. Stop. You do the journalist jobs. They're taking notes. That's funny. All right. GM's still falling 6% here. I think Ford, if there's sympathy momentum, it's probably Ford right now. I agree with if GM gets downgraded, it's like, oh, if GM gets downgraded by Morgan Stanley and falls 5%, maybe Ford will too. Yeah. Whatever. Okay, Robinhood's trying to recover from some of its pain here. Not a lot of deep red, though. Probably the indices, I would guess, are near flat or slightly up. Yeah, okay. NASDAQ's 0.08%, big deal. SPY 0.08%, who cares? I mean, this is just a chill day. So Netflix and chill. Or do we not say that anymore? You know what is running, though, is Peloton. I mean, look at this. It keeps pushing. After just this disaster, it really started running when they confirmed that they were cutting jobs and getting rid of their CEO. It's kind of funny because in the Titanic video that I edited together, we have the Peloton CEO, right? He gets a label in there. And it's kind of funny because, well, no, never mind. Okay, so yeah, a lot of speculation again. The Peloton speculation, like why would this go up? Speculation about the acquisition. That's it. Enthusiasm over that potential acquisition. Of course, Velodyne struggling over here. Alibaba still climbing nicely here. I mean, 5.6% on Alibaba. It's 121. It's where it was like a couple days ago. Yeah, see, we've kind of been bobbing around this floor over here. Yeah, Chegg's not even pulling a Peloton here. You know, there's someone wrote a Seeking Alpha article like NIO to become dominant in global EV market. And like, don't get me wrong, I love NIO, but dude, and maybe I should have read it, but I didn't read it. I'm like, what would possess you to say that at this point? It's not even close. Let's say that about Lucid. I don't know. And I like NIO. Again, I want to make that clear. I like NIO, but it's so relatively small still in the EV space. Oh well. SoFi 1.62. Yeah, this is boring. The sticks aren't moving that much. I guess you could have shorted Snap. It's down about 5%, but not much other than Peloton. Okay, let's go see if we can find some other news. Oh, there was a Barron's article that I wanted to look at. Yeah. This was actually bullish. So people keep telling me, Kevin, you got to be bullish. Okay, all right, fine. So let's go read a bullish article. Okay, yeah, here we go. All right, let's figure this out together. Despite jobs blowout, here's a reason to bet on the less aggressive Fed. Okay, all right, I'm open-minded. Let's see here. The January jobs report was too good in that blowout numbers, especially considering Omicron, intensify concerns over aggressive monetary policy tightening. But investors looking for a reason to believe the Fed won't be quite as hawkish as feared can find one in a separate, less buzzy data reported earlier this past week. Yes. Okay. Where is it? Revisions. All this is up. That's fine. The 0.7% in average hourly earnings, we talked about that. The inflationary pressures, Phillips curve has risen from the dead. Okay, so where's the argument? Okay, here. The Phillips curve has come back with a vengeance, meaning that fast falling unemployment suggests ongoing ongoing wage inflation. I don't know why that would be good, but okay. I mean, people making more money is a good thing, but not great for the Fed's purposes. Where's your argument here? Let's see here. Wait, okay. There we go. Here's where the data becomes interesting. On Thursday, the Department of Labor separately reported that non-farm productivity and unit labor costs soared at an annualized rate of 6.6% sequentially, almost double the rate that Wall Street expected. Now, one of the things, because I heard about this as well, one of my first reactions, and I don't know, but one of my first reactions to this is, did we have a change in labor productivity potentially because did something change with Omicron? You know, was the people who worked, did they have to be more productive? Because I'm pretty sure average hourly or average weekly hours worked went down. And if weekly hours worked went down, but we were still very productive, does that potentially mean productivity went up? Just depends how they measure productivity, especially since they're annualizing it. This would be more like a 0.55-ish%, monthly gain. But anyway, let's see here. Unit labor costs are super important. Okay, we know about that. Where is this about productivity? Employment cost index. Okay, senior combat. Yes. Cause for optimism. I'm trying to get. Well, I don't. A surprising decline in the unit labor costs in the fourth quarter suggests inflationary pressures could ease. Okay, so they're saying a couple things. One, productivity and a decline in the employment cost index, which slowed unexpectedly in the fourth quarter, which is weird because labor prices actually it went up, which is interesting. So I'm going to have to break this apart a little bit more. Productivity running at 3.5% is no doubt optimistic. Yeah, okay. Well, I don't know. I don't know how I feel about it. I want to feel good, but I think that's going to require a little bit more searching. Man, I should have shorted this. Look at Velodyne. I knew it was stupid. I don't even know if it lets me short. Does it? Let's see. I mean, I'm not going to short it at this point anymore. All right, let's see here. Does it? Well, I guess it would. Yeah. Darn. Or at least the prompt comes up. But dang. I should have shorted it in the after hours yesterday. Next time I have that suspicion, I will do that. On the other hand, Peloton continues to run. Quite an impressive move for the day. Otherwise, mostly quiet. Snap and GM falling. GM on the downgrade. That does make me wonder what's happening at Snap. It's possible that Snap is really just taking or falling back down because of that insane 50% day it had after earnings. All right, let's see here. I always think this is such a funny comment. People are like, "Oh, Dr. Fudd." It's like, what do you want me to say? You want me to just lie to your face? If there's bad news, that's what I report. If there's good news, that's what I report. I don't make the news. Go give me better CPI data. You don't want fear, uncertainty, and doubt. Then go over to the Thursday CPI data release and make it 6%. Make it come in great so I could go buy stocks again. Please make it plummet. I would love that. I would love nothing more because it is more stressful being outside the market than in the market. So it's just these allegations of oh, it's Dr. Fudd or whatever. It's like, what the hell do you want me to do? You know, lie to you? It's so stupid. It's really stupid. All right. Oh, Snap is offering convertible bonds. Oh, I see. Okay, due in 2028. 1.25 billion of convertible senior notes. Okay, so they're raising money. All right. Well, that makes sense. And the stock's not loving that. It's actually kind of brilliant. If you think about it, they surged 50% after earnings, and then what do they immediately do? Let's raise money. It's actually kind of funny because the CEO went on CNBC. Is like, we think we're doing better than Facebook. We're killing it out there. We know TikTok's a competitor, but our metrics are so much better on a per this, that, whatever. And I mean, there were some things he said that were a little humble, which I thought was nice. But the overall message was like, we're freaking awesome. And it's like, okay, so the stock surges after earnings, because it fell 30%, 30 or 40% the day before. It recovers all of that pain, goes up 50%. CNBC goes, pumps it with the CEO. And then the next day, 1 or 2 business days later, they issue a bunch of convertible bonds, which dilute shareholders. It's quite brilliant. I mean, really, I have to say, the level of coordination in the market to really just screw people is quite impressive. And sad. It's terrible. Lucid's down another 3% right now. Theta decay on the options, honestly, is probably about 3%. Let me look here. Because I've been short Lucid, but I've also been trading. Let me see here. Theta decay, I lose 6.5 cents a day. Well, that's not as bad. That's only a little over 4. depends what you paid, I guess. That's about, okay, in 2 days, you would lose about 3.2%. Not that bad yet. But still high, 1.6%. But anyway, people always forget. You don't know what theta decay is. Stocks and Psychology of Money course is for you. You gotta look at that. All right, so Snap just hates this. Now it's almost down 7%, which is crazy. But then again, it's also a wonderful rug pull to do the convertible bond offering right after your hodlers went through like a crazy week last week. I mean, and to some degree, the company does get the money, so they have more cash, which gives them more resilience. But in the short term, it's sometimes a little bit of a slap in the face because the share price does go down. Okay. Is Tesla still green? Let's see here. Theta decay, the Greek god of time. Yeah, no, this is wishful thinking. So the theory here in this comment is that, hey, if inflation expectations, let's say, are going up, or inflation in general is going up, and companies can raise prices to have higher margins, which is exactly what they're doing, that's great. The thesis is, oh, companies should do well, right? And then therefore stock prices shouldn't come down, right? No, don't work that way. The reason, and Tesla's actually popping on a little 1 minute right here. The reason is, if we think we're going to have a very aggressive Fed and we get high inflationary numbers, and we think there's the potential that the Fed could crimp the economy at the same time as we have higher inflation, and you start getting recessionary concerns, or you start getting stagflationary concerns, the market has not priced in anything remotely close to those sorts of scenarios. The market's pricing in a smooth landing. So it don't matter how profitable Apple is when their valuation gets cut, from whatever it is, a 30 PE to 20, let's just say, as an example. I don't know exactly what it is right now. So the bigger boogeyman is the sentiment of the market. And if sentiments of markets turns down, I don't care how great your cash flow is. It's the same thing as rental properties or like multifamily real estate. It doesn't matter how stable your rents are. If valuations change, valuations change. Now, hopefully they don't. The real estate market has been incredibly resilient. Yeah, and it's just the demand is insane. I mean, everything's selling with multiple offers. It's crazy. Anyway, okay, so what was interesting about Tesla is that Tesla actually reported some news that wasn't that great yesterday. I didn't think, but they were talking about how they removed a particular chip because of the supply shortages in China. And I think it was probably mostly fuddish, but what was somewhat annoying about it was anybody who wants to get FSD in the future in China who has this missing chip is now no longer just going to be able to get FSD via software update. They'll or over-the-air update. They'll actually have to get this chip reinstalled, which I suppose it's better to get the cars out than not, especially if it doesn't affect safety. But still, it was not that ideal. Yeah. It's Harley Davidson story. We covered their earnings at the beginning of the call, or not the beginning of the call, at the beginning of the live stream. Let's see what they're doing. Harley's up 10%. Well, I'm going to add them because I like watching them. I look at their earnings every so often, but I didn't actually have them on the list here. Okay. Velodyne has almost gone back to no gain. Man, I should have just shorted it when I said. That's okay. That's all right. I mean, we knew this was ridiculous. It's what I said yesterday. I maintained that. It's what I believed when we opened the live stream here, and it's still what I believe. This is the stupidest rally I've ever seen. I mean, I've seen some pretty stupid rallies, but this is one of this one's definitely up there in terms of stupid, low volume, fake out rally. I just feel bad for people who get caught on those. Imagine you bought Velodyne yesterday as it's soaring, right? So you're like, oh my gosh, I got the tweet, all the volatility and stuff, all the volume or whatever. And you buy this thing as it's soaring. And let's say you buy it right here at like 550, right? And you're like, oh my gosh, I just made an easy $1.50 on my shares. And then you go to sleep. and then you wake up to 420. It would just suck. But I don't know. I guess that's what happens. So, okay. Peloton, I don't know if we're actually really going to get rejected over here at 34.28, but it seems like we're relaxing a little bit. JPM's actually moving a little bit here. 2.77. Let's see if Bloom's got any news for us. We talked about Barron's. I got to really look into that productivity curve. T-Doc tanking, is that true? See, what is this? Dude, you got to be kidding me. This was the strategist from yesterday. Okay? I kid you not. This is ridiculous. So, this is what they're telling you guys. Okay? This is what they're Bloomberg. This is disgusting. Okay, hold on. I'm now going this. Okay, I'm pissed. Look at this. The very first article on Bloomberg.com is JP Morgan strategists see surefire sign it's time to buy stocks. Notice how they don't tell you which strategist. It's not like some dude at JPM. They're implying that JP Morgan, the entire bank, is saying it's time to buy stocks, right? But look at this. Okay, watch this. What did I start this live stream off with? Look right there in the middle. David Kelly, chief global strategist at JP Morgan, says it's frankly worrying and investors should prepare to switch towards long duration assets and tilt towards value and growth stocks. Now, maybe they're suggesting the same, but based on my readings of these two reports, they're not. Like, this was just like buy the dip on everything. And this is like, get out of the US. It's like, it seems like two very, very, very different, and no mention there about the time. Whatever. It's the media narrative. This is what they tell you in the back end. This is what they tell you in the front end. I don't get it. It seems discongruent. It's how can on Bloomberg in the back end you say this, but on the front end you put that on the front page. I don't know. I'm becoming too jaded. I'm sorry. I apologize. I'm going to take a sip of cold coffee now. All right. David Kelly is a bear, says someone. Oh, let's get him. Let's get an interview. Interview. I would love to get Kathy in for an interview. I don't think she ever will. Even though I've been one of her biggest fans for a very, very long time. I did post a video this weekend, I think on Sunday, that was not very nice. But I've been a very big fan of Kathy for a very long time, and I've agreed with her, and I still do, with her long-term belief in deflation in the long term. In the short term, we're on very, very different pages. There's a lot of pain to come, I think, in the short term, especially for ARK. Yeah, you don't really see her do any interviews other than just mainstream media stuff, and I think that's a somewhat of a disservice to her investors, especially since she's got such a retail army. Let's see what's going on with T-Doc. One sec. She's got such a retail army that loves her and is losing so much money with her. Like, come answer some questions to commenters or to retail. I honestly think sometimes you get you get these larger fund folks, and they don't want to answer anyone's questions. It's just like they make their obligatory kind of video once a week, once every other week. They their obligatory Bloomberg appearance or whatever. And that's good. They don't want to do anymore. Fine. Okay, there's literally no news on T-Doc, by the way. Well, there is news now. It's down 5.7%. Jeez, man. Yeah, that's true. Crypto analyst again. I guess I could text him. I don't know if they'll come back. Oh, Valentine's actually trying to pop off 420. That's funny. What a scam. Peloton. Okay, so we've seen these moves here. SARK. Oh, there you go. The short on ARK is paying off right now. I'm not short it right now, but let's see. Okay. I think otherwise things have somewhat relaxed here. Well, ARK is probably falling here because of T-Doc. But wait a minute. Is this the same pattern we had yesterday, where we had the little rally at the beginning, and then we start falling? Oh, that's interesting. That's quite interesting. That's very similar. I mean, Tesla is now down almost 1%. Look at Google. Google after the Wall Street Bets interview, or the Wall Street Bets pump. You know, this was earnings, and then everybody on Wall Street Bets like, that's it, we're going all in on Google. It's got a stock split coming. It's going to the moon. Not in this market. Yeah. Oh well. And I really like Google. I mean, like I think one of the companies, like if somebody's like, Kevin, you have to choose all in on Bitcoin or Google, I would probably pick Google. Same thing if I was asked about Tesla or Bitcoin, it'd be Tesla. But okay, how about this? All in on Google or Google or Apple. That's a tough one. Oh man, I'm setting myself up for that's hard. Oh man. I don't know if I could answer that one. I think Google's got the better valuation right now. And I really think that YouTube is underestimated. And given that it's a service and advertising, I'd probably lean towards Google actually versus products over at Apple. Yeah, probably be Google. No, I really like Google. No. How about Baba? No. No Baba for me. No, thank you. All right. So some volatility coming here. First hour, whatever. Snap still sitting and trying to knock on the door of that 7% decline there. Peloton is just killing it today. I guarantee you it is all, and I can't. I mean, no guarantees, but I guarantee without guaranteeing that this is all speculation on the acquisition. What would you buy in a recession? I mean, I think in a recession everything gets hit. You know, you probably would see a goal like a short term. I don't think long term, but you'd probably see a short term gold rally. I don't love investing in gold. I don't have any gold. But that would be a trade, right? Because the reason I think you would see a pop is because if we went into a recession, I think you'd have a lot of people freak out really fast. Be like, oh my gosh, I need to get some gold. And then you end up seeing some form of a gold rally short term. Gold's been pretty flat. Here, let's do this really quick. Let's look. Gold price. There we go. There you go. Yeah, here. So here's your 20-year chart on gold. And I think what's worth looking at is really the last 5 here. Actually, probably less since the pandemic. Let's just go 2 years here. So gold's basically done nothing. It's got this mass. You know, that's actually a nice consolidating pattern, if I have to say so myself. That is quite a consolidating pattern, which, you know what happens with consolidating patterns? You get a breakout to either the up or downside, usually. I mean, look, if I were to draw a wedge on this, this would be freaking perfect. Can I get this on Wobble? Does anybody know the ticker for this? I mean, I could do IAU, which is not really gold. It's not going to be as ideal. I'll go to the week chart. That works. Okay. That'll work. I mean, that should be good enough as a proxy. GLD. Yeah, GLD is just like IAU. It's another, you know, ETF style thing. It's not gold spot. Like what I'm wondering is gold spot. And I don't think that Google or Wobble does commodities. I don't know. Oh, come on. I mean, on the week chart, I don't know, man. like, and I could find, I don't really care to right now. We could fine tune this a little bit and start trying to draw lines up or down or whatever. I don't really feel like doing it right now. But it's quite, it's obvious. I mean, you could visualize it without even drawing lines. It's quite the consolidation. But yeah, that would be, in my opinion, just a shorter term kind of trade. If you end up getting like a fear panic, like real fear, like people keep trying to show me the what's it called, the fear and greed index, and they're like, oh, but Kevin, here, fear and greed index, the CNN one. Oh my gosh, because CNN all of a sudden knows. yeah. This. People keep showing me this thing. And they're like, but Kevin, it says there's fear now. That last year there was greed. That a month ago it was neutral. And I'm supposed to be greedy when it's fearful, right? And I'm like, wait until the thing gets to zero. No, I know that's a little bearish. But I'm just disappointed in J Powell's U-turn, which led to mine, right? I blame him. I blame him for everything. That's it. It's his fault. It's not me. It's him. And if he was here, I would tell him that to his face. J Powell, I had to flip because of you. And I was you for Halloween. How does that make you feel? You stabbed the one person in the world in the back who dressed as you for Halloween. I had like 3 hours of makeup to look like you. Ay. Dang it, pal. Oh, well. JPM's killing it today. I mean, for one of your top 15 here in the S&P to be up 3.3%, while you got pain in other things, like Snapchat still got its pain here, 7% on the convertible bond offering. You've got Lucid down now 3.6%. It's fallen even more. Roblox down 2.81. Nvidia down 2.8. Square. Oh, ARK's recovered a teeny tiny little bit. Matterport. Geez, the Matterport pain ain't going away. Probably not at Lemonade either. And remember, folks, I think if there's a quote for you to remember, it's that when stocks fall, here, hold on. People like doing this. They say, but Kevin, look. Oh, but Kevin, ARK used to be $159. Now it's $70. Look how cheap it is. And I'm like, hold on there, Jimmy. There's a difference between cheaper and cheap. So remember that. Cheaper does not mean cheap. Let's see. All right. Anything else? Yeah, I do have another bit of news to report, and that is that I got a what are those things called? What are the little racks that you put paper in? A paper rack? I got a paper rack, so now I can put my hands in there. Anyway, I did get a paper rack. It holds everything together. All right, I gotta go. I'll see y'all later. Goodbye. Check out FTX via the link down.